Yeah, you mentioned all the good stuff. I think the bad stuff here was revenues are down 6%. Software especially is down rather dramatically. That's a bit of disappointment, I think, for investors, given Red Hat is supposed to inflect higher. So that's one. The other part, to your point on free cash flow guide is good. There's a little asterisk there, which is it excludes $3 billion of charges that they're going to have. I don't think investors fully incorporated that. So if I do an apples to apples compare, free cash flow is about $8 billion. That's a couple of billion below expectations. I'd say the revenue disappointment, especially in software, the free cash flow guide are two things that are driving the stock lower today.
So what are you looking out for on the earnings call? They've been announcing some restructuring of the sales teams, also, of course, a new vice chair of the board. What will you be listening out for?
I'd love to understand what Gary Cohen is doing at IBM, so maybe that's a good place. Structurally, I think what you want to understand is what does IBM look post the spin that's happening? What's the revenue profitability going to look like for the company? That would be one thing. The other part, are these revenue headwinds they're having essentially customers trying to get better terms ahead of the spin potentially, and is that going to be a big drag for them? And the third part I would say is what kind of investments they want to make in terms of M&A or R&D investments. I think those are three vectors people really want to understand over here.
I mean, does this company ever get credit? Is it after the spin-out up for being a cloud company? I mean, it is a $25 billion, 20% growth, as I mentioned, which puts it behind Microsoft and Amazon, of course, but in that top three. When does Wall Street give it credit, if so at all, for this hybrid cloud business?
It's a great question, and I'm sure IBM would like to figure that one out. Our take would be, to the extent we can start to see some degree of stable revenue growth out of the model, you will start to get some credit in this. But I think that has been lacking for IBM as consistent, stable revenue growth, even if it's 3%, 4%, 5%, low single digits. I think if I can get that, perhaps post the spin, I think investors would start to give them a lot more credit than they've gotten so far.
And my final question, is how tied they are to the macro environment and the outlook and the appetite for IT spending. If we do get a lot of stimulus, if we do get growth rates that are 5%, 6% in the economy, what does that do for a company like IBM?
It's a great question. I think as long as there's a rising tide, it should lift all boats, including IBM. The nuance, I think, will be, is this GDP up 5%, 6% driven by consumer stimulus, right? Or is it driven by real macro corporate profits going up? If it's consumer stimulus, then perhaps the benefits will accrue to someone like Apple. But if there's a big corporate profitability uplift, infrastructure spending happening, then you should see an uplift at IBM. And importantly, I think we should see an acceleration towards a hybrid first narrative, which would benefit really well for IBM as you go forward.
Amit, we'll leave it there. Thanks so much for joining us.
Shepard Smith here. Thanks for watching CNBC on YouTube.